Good morning friends and welcome to Sharekhan's pre-market action. The global environment is positive. Yesterday we saw the Dow closed up by around 29 odd points and Nasdaq was up around 12 points on the back of the strong data which suggests a stronger economy for the US. Also there are some peace talks which are happening between the US, between Russian President for Ukraine, and that is also boosting the overall positive sentiments across the globe. And that's the reason why we saw yesterday's European markets also closed on a positive note, and currently the Asian markets are also trading on a positive note. Yesterday the FIF closed a positive to tune around 365 crores, although DIs were a bit negative. But overall still the trend remains positive for the Indian markets on the whole, and we have an expiry tomorrow, so probably the volatility might increase for the Indian markets. But let's have a look as to how the markets are likely to spend going ahead based on the derivative analysis.
Friends, let's have a view on derivatives. Yesterday Nifty started the session on a flattish to negative note, approximately 20 points down from previous day's closing. And initial number of trades, we have seen that markets were continuing to trade in a narrow range of 10 to 15 points. But many of the blue chip counters like IDFC, Tata Power, Jindal Steel, ONGC were continuing to put pressure on the benchmark indices to trade in negative terrain. But later on we have seen that Nifty showed resilience at 7870 odd levels. From there it started recovering and made a fresh intraday high at around 7918 odd levels. And Nifty finally snapped its session with a marginal loss of 0.11%. In this period we have seen that marginal short positions were built up by market players as open interest increased by 0.52% from 1 crore 73 lakhs to 1 crore 74 lakhs. Approximately 1800 contracts were added in Nifty futures, and Nifty futures price decreased by 10 rupees. On the other hand, cost of trading also decreased by 71% from 14.08 to 4.04, and Nifty futures boom decreased significantly from 12 points to 1.75 odd levels. On the options front, we have seen that PCR is decreased by 1% from 1 to 0.99, which is clearly indicating that in yesterday's trade we have seen that put option has shredded its shares in open interest, as well as call option also has shredded its shares in open interest. India VIX was up by 0.80% from 13.70 to 13.90 points. In the options activity in yesterday's trade, we have seen that 8000 call option has reduced its shares in open interest. Initial number of trade when market was started, we have seen that 8000 call option stands with 1 crore shares of open interest, but in the later period of market we have seen that it has reduced its shares by 2%. And in 7900 call option we have seen that 22% shares were added in open interest. Approximately 60 lakhs contracts are available in 7900 call option. And in put option 7900 has reduced its shares in open interest, and 7800 has added 3% marginal shares in open interest. Approximately 64 lakhs contracts are available in 7800 put option. There are 3 securities in ban period. One is IB Real Estate, second is IRB, and third is JP Associates. FIs were net sellers of 109 crores in future and option segment in yesterday's trade. They were net buyers of 269 crore in index futures. They were net sellers of 279 crore in index options. They were net buyers of 47 crore in stock futures, and they were net sellers of 146 crore in stock options. A 5-day CVM stands at 7915. Lower range for the market would be 7870. This might act as a strong support going forward, and higher range would be 8022. Overall, our setup for the market is positive. We may see market may continue to trade with upward journey, and Singapore Nifty is up by 25 points, which is at 7935.50. So we may see flattish to positive start in Nifty futures today. That's it from derivatives. Thank you.
Let's have a look at some of the actionable ideas for today. First and foremost, a negative news for UCO Bank, where the government has ordered a limited forcefully audit into some of the non-performing accounts of Kolkata-based UCO Bank to find out any irregularities, if any, in sanctioning of loans. And so we recommend to go short on the basis of this news, which is sentimentally negative for the bank. And keep a stop loss of 99.5 for target of 95 today. ONGC, the positive news is that the oil ministry will seek the cabinet not for feeding the diesel prices after the retail rates achieve parity with the global levels, and has proposed to cut subsidy payout by the upstream firms like ONGC by half. So action to be taken is long ONGC, stop loss of 412 for target of 428 and 435. Positive news for the defense stocks. The defense sector, the government has apparently done away with the condition of 51% equity ownership by a single Indian partner while raising the foreign investment cap to 49% from 26%. It is also lifted and only a 3-year lock-in period for the foreign investment in this sector. So we recommend to go long in some of the different stocks. Astra Micro is one of them, and we recommend to go long with stop loss of 23.5 for target of 128 and 130. Stock with positive bias for today: ITC, Tata Steel and Bharti Airtel. On the news update, CCEA may approve the coal supply linkages to the power plants today. Another news of Cabinet, CCEA, CCI and CCS to meet today to clear the government's 5% stake in ONGC via OFS. Some of the changes which have been made in the NSE, in the mid-cap index, Adani Enterprise, Adani Ports, UCO Bank, McLeod Russell have been excluded from the CNX mid-cap index, and HDI, IOC, IRB, Ranbaxy have been included in the CNX mid-cap, which will be effective from September 26. On the other news, Jindal sought to restructure the transshipment business of the arm Jindal ITF. Infosys will derail a strategy under SICA by October. The new leadership is in the process of deliberating and discussing the way forward for Infosys. And lastly, CEAT Limited to raise up to Rs 500 crores through the issue of shares. As per the Clothing Manufacturers Association of India, the apparel index has grown by 9.15% on a year-on-year basis from March to June quarter, reflecting the improving sentiments in the category, which spells a sentimentally positive for the listed apparel companies like Raymond, Cable, Kiran, Shoppers Stop, Pantaloon and Future Lifestyle. That's it, friends, from the morning pre-market Sharekhan's action. Thanks and have a nice trading day.